When retiring, you think about a lot of different things to consider. Some enjoy the natural beauty a city might offer, while others are more into how the climate is in that specific place. Maybe you're a culture buff and you like to visit various museums, theaters, music venues, and cultural events in the area. Cities like Portland or Eugene may be your preference then. We all have different reasons as to why we'd like to settle down in a specific location. But on our end, we'd like to kind of look at it from the financial side of things. This is Income Intelligentsia, real-life advice for practical and financial goals. Today, we want to talk about the state of Oregon, specifically how they tax their retirees and how you can benefit from retiring there. So let's get to it. The state of Oregon is appealing to retirees for numerous reasons. Some like it for its scenic natural beauty with its lush forests, rugged coastlines, towering mountains, and serene lakes. Some enjoy the moderate climate provided by Oregon. Since a lot of places in Oregon are around the coast, they get to enjoy a mild and temperate climate. But the reason we'd like to talk about Oregon is for its tax laws for retirees. A very significant advantage that most retirees can enjoy in Oregon is that they have no sales tax. For retirees that have saved up a lot, that's a lot in taxes saved, and because of that sole reason, Oregon has a growing population of retirees. More than that, however, Oregon also has tax laws that are specific to retirees. Understanding Oregon's tax laws and how it affects retirees is important to having a financially prepared retirement. It affects a lot of different aspects, including your financial health and your overall health as well, since you won't have to worry about it so much. Let's start by talking about Oregon's income tax scene. When talking about Oregon's taxes, one of the main ways that it does so is through income tax. Since it has a progressive income tax system, you end up paying more taxes the further you are in the tax bracket. Their bracket system ranges from rates of 4.75% to 9%, with the income threshold for these annually adjusted for inflation. Of course, for retirees, how your income gets taxed is a very important factor, and it applies to a lot of different income sources. Retirees earn money through different sources of income like pensions, social security, and others, so being provided tax breaks and exemptions can help out a lot in dampening the blow to their income sources. Social security benefits, for example, are subject to income tax. However, it's important to note that there are some exceptions. The state offers a modification for federal social security benefits, which means a portion of these benefits is exempt from Oregon income tax. Now, the amount exempted, however, depends on the retiree's federal adjusted gross income. For people with federal adjusted gross incomes below a certain threshold, the modification fully exempts social security benefits from state income tax. It's important for retirees to consider this as it can significantly reduce their state tax burden. For pensions and other forms of retirement income, it's taxed in the same way as social security benefits are. The state offers a pension income deduction, allowing retirees to deduct a percentage of their pension income from state income tax. The amount of the deduction is determined by the retiree's age and the source of the pension income. Some public pension incomes, such as PERS or Public Employees Retirement System, and TIAA or Teachers Insurance and Annuity Association, may be free from state income tax in part or whole. Additionally, Oregon has tax treaties with various other states, which may affect pension income taxes for retirees who move to Oregon from these places. To maximize their tax savings, retirees should understand the exact laws and exemptions that apply to their pension income. Apart from these, Oregon also has other tax credits and deductions that you can take advantage of, such as senior medical deduction. If you're above the age of 62, you might be eligible for a medical deduction that allows you to deduct certain medical expenses from their income. This allows you to reduce your overall tax liability. Property tax deferral. Oregon also allows a property tax deferral program that can help retirees with tier homes. Eligible seniors are allowed by the program to defer payment of property taxes on their homes. This offers retirees financial relief on fixed income households. Kicker refund. Now, this isn't specific to retirees, but it helps out nonetheless. The Oregon Kicker tax rebate is unique to the state's tax system where it provides a refund when state revenues exceed their expectations. As a result, The extra money from their forecast can be a welcome financial boost for retirees and other taxpayers. Earned Income Tax Credit, or EITC. This program is designed to help out low-income individuals and families by providing financial assistance to them. Retirees that fall under their umbrella may be eligible for this credit, which can help in offsetting their tax liability. These types of tax credits can help out retirees in Oregon by offsetting their expenses and can all add up to make a significant change in their tax reductions. That said, we need to talk about one of the more expensive taxes retirees face, and that's property taxes. Now, this is a very important consideration in the sense that it varies depending on your location. Since it funds local services, schools, and other community needs, it's determined by local taxing districts. There are some exemptions provided to property owners that benefit retirees, like the Senior and Disabled Citizens Property Tax Deferral Program that allows individuals that are eligible to defer property tax payments until they sell their home or pass away. That said, we'll move on to sales tax. Now, Oregon is known for not having a statewide sales tax. They don't impose a general sales tax on goods and services, and as a result, many retirees are attracted to the prospect of settling down there. However, local jurisdictions can still impose their own specific sales tax on specific items or services. Estate taxes are also an important thing to take note of, as retirees who wish to pass on their assets to their beneficiaries need to know how much they're getting taxed for it. Like income tax, their estate tax system is progressive, with rates ranging from 10% to 16%, adjusted annually for inflation. With their estate tax laws, there are also exemptions that fall under the threshold for it. Estates that fall below it are not subject to any estate tax. That said, those are just some of the general considerations when it comes to knowing how much you're taxed in the state of Oregon. Some helpful tips to consider when retiring in Oregon are: knowing your location matters. Property tax varies from location to location, so understanding where in Oregon you'd like to retire is important too. Maybe a favorable property tax rate is important to you, so knowing where in Oregon you'd like to settle down is key. Tax-friendly investments. Diversifying your investments and looking for tax-efficient strategies can help you minimize your tax liability and help you retain more of your income. Maximizing exemptions. If you add up all your tax credits and all your exemptions, you can save up on a lot of money that can be used for other more fulfilling matters. The Social Security modification and pension income subtraction can greatly help you mitigate tax blows on your retirement money. Estate planning. Retirees with high net worth should consider planning strategies to help minimize the impact on their estates. Oregon's estate tax is progressive, so the bigger your estate is, the more you're gonna get taxed for it. Consider consulting with estate planning professionals in order to have a clearer picture of how your estate planning is gonna look like. Awareness of local taxes. While Oregon is known for not having a statewide sales tax, retirees should still be aware of their location's local sales taxes that apply in their area. That said, there are many more things that you can do in order to prepare for retirement in Oregon, and being knowledgeable about the state's laws is key to living a financially prepared retirement in the state of Oregon. It doesn't have to end with the tips we provided, and for good measure, consulting with local tax professionals would be your best course of action if you want to do more with your financial planning. If you've enjoyed this video and found us helpful, please hit the like and subscribe button. We'd like to be able to grow alongside you, and we're pumped to have you on our next video. Stay mentally healthy, and let's get financially fit together.